Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the medium time frame with the bullish scenario where we're looking for a 5-wave impulsive structure to the upside where wave 4 is finished, bouncing on top of the 0.236 Fibonacci taken from the low of 2 to the high of 3, which is a common target for a wave 4. The target area for a wave 5 is between 46.1k and 52.2k, with the most common target area being between the 1.236 and the 1.618, between 46.1k and 48k, taken from the high of 3 to the low of 4. The 0.618 of course also a target at 52.2k, then taken from the low to the high of 3 to the low of wave 4 with the trend-based Fib extension tool. Now in this wave 5 we are then looking for the following impulse to the upside where we have a wave 1 and 2 finished. We're now working on a blue wave 3 to the upside, after which we then expect a wave 4 in blue and another wave 5 to the upside to finish the green wave 5. Inside the blue wave 3 we are then looking for the white count in a 1, 2, 3, 4, 5, currently working on this impulse to the upside as a wave 3, still looking for a 4 and a 5 to come to finish the blue wave 3. Now for an impulse, wave 3 usually goes to the 1.618 taken from the low to the high of 1 to the low of 2, which for this blue wave 3 is sitting at 48.2k. And if we open the target boxes over here, we are currently ranging inside this yellow target box, as you can see, between 45.2k and 46k. And there is one more resistance box before hitting that 1.618, which is the blue one here, between 47.2k and 47.5k. Currently, we hit the monthly level over here acting as resistance at 45.5k, but as you can see, we also have a yearly above at 46.2k, which should be an even bigger level. Now, something that is important in this particular scenario is the comparison between wave 1 and wave 5. If wave 3 is extended, usually wave 1 and wave 5 are quite similar in price and time. But as you can see, this wave 5 is going to be much bigger in time and price compared to this wave 1. However, putting this wave 4 over here does not really work because of the ending of this range over here. So one of the counts that we had on the chart was a WXY to finish over here after then a zigzag structure and then looking for a move towards the upside. Now in a WXY structure, your wave W and your wave Y have to be simple structures in a zigzag or a flat, and wave Y can also be a triangle. However, here on the lower time frames, we are then looking for a WXY structure over here, and as mentioned in the video yesterday, this has a higher probability at the moment compared to an ABC to the downside because wave C didn't hit the target area as well. So that is the reason why I moved this wave 4 over here. Now this only really matters for the target area of a wave 5, the height, because in this scenario your wave 5 is going to be a lot higher compared to ending your wave 4 here, where then this is your 1, 2, you're looking for a 3, 4, 5, and then that is the end of your wave 5. However, in both of these scenarios, we are still looking for price to move to higher levels. The bearish scenario on the chart would be a flat structure where we are looking for a bigger wave 4 over here in yellow, where we, if we zoom out, have an impulse as in a wave 1, 2, 3, bigger 4, and then a wave 5 to the upside, where this move over here is a wave B, and we then expect a wave C to the downside. Most common target area for a wave B is between the 1 and the 1.236 Fibonacci taken from the high to the low of A, which is between 45.5k and 46.5k, and we then want to see an impulse to the downside in a wave C, 1, 2, 3, 4, 5, where your target area for your wave 4 is between the 0.236 and the 0.5 taken from the low of 2 to the high of 3, which is between 40k and 34.8k, with the invalidation being the 0.618 at 32.4k. Now, if this becomes a potential ABC flat, then it will be very short in time to end a wave 4 already over here compared to this wave 2. You can see the fib times on the chart taken from the high of 1 to the low of 2 and then put on the high of wave 3 to compare wave 2 in time with wave 4 in time. And wave 2 is long and shallow, so wave 4 can be short, but still preferably you like this wave 4 to end after the 0.382 fib time, which is sitting on the 31st of January. So a wave C tends to be very quick, but therefore probabilities are high. You're not going to reach the 382, and that is the reason why I would then be looking for an A or W, B or X, and a C or Y to the downside to have a longer range in this wave 4 before then continuation to the upside in a wave 5. If we then look at the local price action, then we were looking for price to move towards the upside and also move to this target box over here, where we were looking for either impulsive continuation or a potential ABC. However, if we are looking for an ABC, which would have then been bearish as we expect a retracement to the downside, in a wave C, we still want to count an impulse to the upside and then a 1, 2, 3, 4, 5. But if you see how price moved here to the upside, we cannot count a 5-wave structure. We then had a 1, 2, 1, 2. Then you're looking for a 3, 4, 5, 4, 5. So the expectation was very, very high to move above the box and look for continuation to the upside, which is where we are at the moment, right? Now, if we look at the Fibonacci pulls that you see on the chart, then for this wave 3, we passed the 1.618, as mentioned, usually a common target taken from the low of 1 to the high of 1 to the low of wave 2. You can see the volume increasement to the upside as well, which is what you like to see for a wave 3. The 1.618 was retested, move up to the 2, then a bit of a retracement, now moving and ranging above the 2, which does increase probabilities to look for the 2.618, which is sitting at 46.1k. Now, for this impulse to continue, we like price to stay above the 0.618 because that is an invalidation for a wave 4. It is always difficult to know exactly when a wave 3 is finished because they can extend to much higher prices. So that is why it's always a good idea to have the fibs for a wave 4 on the chart and move them to the upside with price. Now these fibs over here, the 0.618 and the 0.5, are taken from the low of 2 to the high that we have at the moment, where the 0.5 is a maximum target for a wave 4 and the 0.618 would be an invalidation, as we are looking for a range to form. We prefer to see a wave 4 equal in time or longer than this wave 2 over here. So as long as we don't get at least a decent range, we're going to be looking for higher prices to come in this impulsive move. The bearish scenario is that we are looking for a 3-wave structure and then a bigger zigzag, A, B, and then a bigger wave C to the upside. But as you can see, the 1.618 over here, taken from the low to the high of A to the low of B, has been passed, which is already a less common target for a wave C, and extending far beyond the 1.618, it does lower the probabilities for this particular scenario. If we then look at the CVD divergences, then all of the bullish CVD divergences that we had have played out because the highs have been taken, so that's very nice. These can now be removed, and we are going to wait for a range to form locally to reassess the CVD divergences. So if we then look at the probabilities of all the different scenarios, then on the medium time frame, probabilities are currently higher for a wave 5 to form compared to a wave B. So that is why wave 5 is number 1 and wave B is number 2. In both cases, we do expect this local high to be taken, and then we observe the reaction. Again, we do have that yearly level just above at 46.2k, so definitely keeping an eye on that level. And on the low time frame, the probabilities here are at the moment higher for an impulse to the upside compared to this being an ABC zigzag, because your wave C is so extended. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.